Welcome to Second Take, the show that focuses on the issues behind the news. Anglo American is continuing its aggressive approach to strip down to a basic stay-in-business mode. Natasha Odendaal joins me in studio to discuss the strategy, as the platinum group metals mining industry moves closer to a prolonged weak price environment. Hi Natasha.
Hi.
So how is Amplats going about cutting costs?
Well, as I said, it's an aggressive approach that they're taking. It's one that they started back in 2013 already when they started restructuring. The basic idea is they want to right-size their portfolio, get rid of all unprofitable ounces, all the non-core assets that they have, and retain, profitable operations in a smaller, less complex way. At the moment, they're busy identifying which assets to sell. I mean, most of them are already on the market. Some of them are already being processed for sale, like the Rustenburg mines. They're hoping to finish that sale by the end of this year. And then they're also looking at a couple of other operations at the moment to shed. And then in addition to that, I mean, it's to make sure that its operations are actually cash flow positive. It is trying to improve all the operational efficiencies of the assets it does have running at the moment. The whole idea of it is actually just to maintain a profitable business within a low-cost environment or a low-price environment.
And where is the company spending its money?
Well, the money that it is spending at the moment is actually just going to restructuring costs. It's going to operational efficiency, programs that it's undertaking at the moment. It's also did a major labour reduction program that it's also had to pay out for as well. It did a 14 billion rand impairment, which obviously is quite a significant sum for the company itself. But to stay in business, it obviously has to invest some money. So for the 2015 year, it had spent 3.7 billion rand capex, which was a 37% reduction on the year before. And then for the next year, they're actually trying to maintain that amount, keep it between 3.7 billion rand and 4.2 billion rand, just to make sure it can actually stay in business. But the approach that they're actually having now is a lot more focused. It's a lot more strict. They're making sure that they're reining their costs very, very tightly, as not to spend any more than they absolutely have to.
And in which operations is the company divesting or delaying the development of?
Well, one is the Twickenham mines. They revamped the whole plan for that mine to turn it into a more mechanized mine. They're delaying that. They've actually put the mine, or busy putting the mine on care and maintenance until they can actually bring it, until they can actually continue with its plans for that mine, because it's actually a strategic mine for them. They'll delay that for a few years. They've said that most of their growth projects, they're going to delay investment into them for a period of 2 years. So it's more or less a moratorium on, investment spending, growth spending. They've also decided that they're going to sell off their investments in Pandora. They're looking at options for its Kroondale stake as well. At Latsa, Bokani, they're all trying to sell those off now as well. And that's in addition also to the Rustenburg mines, which we mentioned before, that they're actually busy selling at the moment. They're also selling the Union mines, and then they are also looking at mothballing the Tumela life extension. So the Tumela 5, they've actually put that on hold at the moment.
And how has all this impacted on its 2015 results?
Well, it's obviously had a significant financial impact. I mean, it's the 14 billion impairment has heavily impacted headline earnings as well, basic and headline earnings. Last year, for the 2015 financial year, their headline earnings itself, they lost almost 600 million rand on it. It came down from just over or nearly 800 million to 100 million or 107 million for the year. Their earnings, their headline earnings per share, I mean, that also plunged considerably from 301 cents in 2014 to 41 cents now in 2015. And then you're looking at, I mean, they've had to absorb 900 million in restructuring costs as well, in addition to their impairments, in addition to the low-cost environment that they're actually playing in, or low-price environment, that they're actually playing in. And I mean, it actually reported a total comprehensive loss of 10 billion for the year.
Thanks, Natasha, for that insight.
Thanks.
That's it for today. Join us again next week for more news analysis on the South African mining industry.